Joining us today in the studio is Ravi Ahuja, Executive Director at Cushman Wakefield India. Sunil Rohakale, he's the MD and CEO at ASK Group. And of course, Jayashree Kurup, Head of Content and Research at magicbricks.com, who joins us in Delhi. MagicBricks is our knowledge partner. Now, the ASK Group recently released a report on the Mumbai region, and it's a very interesting report. It talks about piling up inventory, which we've talked about. It's talked about rising demand from home buyers, but it's also talked about the fact that prices in the city will be arrested at the rate they are right now for the next 18 months. Now, that's the portion I find most interesting. So what I'm going to do right now is I'm going to take you through a report on what's going on in Mumbai, what the Chief Minister has proposed as solutions to all of our problems, and then we'll come back and talk about it. Home buyers in Mumbai have something to cheer about. A recent report by the ASK Group suggests property prices in the city may remain stable for now and are unlikely to increase over the next 18 months thanks to an inventory pile-up of 26 months. But the new state government has put housing and infrastructure on the very top of its to-do list. Chief Minister Devendra Fadnavis promises to ease infrastructure bottlenecks and improve business.
If India has to grow at 8%, my state has to grow beyond 10%. And if I have to achieve that, two major things I would have to do. One is the infrastructure, and secondly, I have to improve on ease to do business. Even if you have to start a business in a designated industrial area, you require 76 permissions. And it takes you 1 year to 3 years to get all those permissions. So I have decided and I have worked out, and I'll be bringing those permissions down to 25 from 76. And it will take just 1 to 3 months.
If everything goes as planned, the existing and upcoming infrastructure will benefit Ghatkopar West, Chembur and Andheri East the most. These areas are expected to be the future growth areas with a spike in end-user demand. Currently, prices in Ghatkopar West range between 15,800 and 19,800 rupees a square foot. That's a staggering increase of 34% from where it stood in 2012. Prices of homes are similar in Chembur as well. Homes are priced anywhere between 15,650 to 20,250 rupees a square foot. And even though Andheri East saw a mere 4% increase over the last 2 years, prices here are currently between 14,000 and 17,600 rupees a square foot. While an improved economic scenario could lead to better sales, the existing inventory will stall any price rise in Mumbai. All right, Sunil, I'm going to come straight to you because this report came straight out of your desk. You believe that prices in Mumbai will not move for the next 18 months. Is this across the board, or will there be pockets in the city that will continue to see interest?
I think real estate as an asset class actually sees a substantial amount of offtake when there is a good infrastructure supported by good income increase and facilitated by affordable interest rates. Today, at this point of time, I think Mumbai is seeing the first part of the story, which is the infrastructure, which in certain pockets have really improved. But interest rate, I think the end borrowers are still waiting to really get on a downward journey. So I think Mumbai in general have been facing a problem of affordability. And hence, certain pockets in Mumbai do look attractive. Simply in terms of...
Name these pockets then.
So, some of these pockets probably is the Chembur, the Ghatkopar East, Andheri East, and part of the extended suburbs like the Ambernath, Taloja and the Kalyan ones. Looks to me quite a opportunity for the end customers and the investors.
It's interesting to me because Chembur and Ghatkopar right now are upwards of 2 crore rupees for a 2-bedroom, 100 square foot apartment. Not the same as Ambernath and Taloja. So if you're calling it affordable from a Mumbai point of view, that's slightly worrying. Now, going by what we heard the Chief Minister say at the ET Awards that happened last weekend, where he talked about Navi Mumbai repeatedly, he talked about the airport, he talked about road connectivity, he talked about coastal road. Will Navi Mumbai be the place to look at for investments in Mumbai?
Of course. I think I maybe forgot to mention about Navi Mumbai. Our report do give us that comfort saying that Navi Mumbai, simply because the city is going to get expanded once the international airport is up, and when there is a sufficient job creation story coupled with the good infrastructure to commute. So physical infrastructure, social infrastructure, probably of Navi Mumbai, will give us the affordability. Now coming back to the affordability cannot be generalized, really capping it to X lakh or crore, but I think affordability is there in every micro market. But in general, if you want to categorize that, you need to have a budget upward of 5 crore if you are looking at anywhere beyond Bandra. If you need to have something which is close to 2 or 3 crore, you're talking about western suburbs. And if you're talking about crore plus, nearing crore plus, then you're talking about the central suburbs.
So affordability is relative to who you are and where you live. Ravi, the solutions that the Chief Minister is offering us right now, is that enough? Is that the good infrastructure that Mumbai will need? Because there are also reports from global agencies talking about how the civic situation in Mumbai currently is appalling, and we're looking at a situation where we will implode with garbage and with congestion, and there isn't enough being done. So from a point of view of a real estate investor, is a road and an airport enough to decongest Mumbai? Should I be looking outside of Mumbai if I'm an investor?
The new infrastructure is the way to go. The decongestion in terms of moving towards Navi Mumbai, the planned development at the NANA, which is the Navi Mumbai airport influenced, kind of a future city, which will take shape and growth over the next 2 to 3 decades. So these are some, and probably the smart cities which will come abounding, by these locations or surrounding areas, are some of the ways to decongest clearly.
All right. Jayashree, tell me this. Obviously, if you're looking at prices not going anywhere for the next 18 months to 2 years, technically against inflation, that means prices will come down. What are you finding right now on the website? Is there enough interest when it comes to buying in Mumbai? And can you tell us whether or not people are actually closing deals on the ground?
Faye, I don't think deals are closing on the ground. However, the interest is very, very high. Transactions are not happening. I think we did mention earlier that there is the interest rates haven't come down, and once the interest rates come down, you will see a lot of difference in the in the transactions on the ground. On the website, I can actually look at demand versus supply, and I find that the 20 to 50 lakh there is a significant demand, but there is a lag of roughly about 6%. When it comes to the demand, because people are realistic. If there is nothing in the 20 to 50 lakh, not very many people are going to search for that property. However, there is a small percentage, about 25% of people are still hoping that they'll find something in that 20 to 50 lakh budget, and they are searching, but there is very, very little stock in that budget, and that is very far out. It's not very easily accessible.
That's a very sad story, actually, if you ask me. 20 to 50 lakh rupees. So I want all of our guests to very quickly tell us this, because we're running out of time. If I am a pure cold investor right now looking to make money in the Mumbai market, and if this is where the demand is, 20 to 50, 50 to 1 CR, give me narrowed down locations that I should focus on that you believe, because they're supplying to this market right now, over the next 5 or 10 years, when the market does recover, I will be best poised to make money. I want to start with you, Sunil. Which market would you recommend? Which neighborhood do you recommend?
Yeah, I personally feel that this is not the market for investors. This is the market for end customers. And when you go into the markets where you like to see the 50 lakh rupee properties, you have to really go to extended suburbs. So which I will fear to qualify as Mumbai.
If I'm an investor, what do you recommend I do?
I think if you're an investor, already there is a sort of correction happened in the market, and the identified locations clearly suggest, given the infrastructure development, that the eastern suburbs will probably still continue to see the traction, both in terms of volumes and price rise. When I say price rise, obviously the significant price rises are behind us. So the Chembur-Wadala belt, or going, in that location, I think still a 5 to 10% appreciation can be looked at. But yeah, the investments are upward of 2 crore. When you look at the 50 lakhs to 1 crore bracket, clearly it's an end user market in my mind, and investors should avoid far peripheral locations which are 40, 50 kilometers away. But still end users are encouraged to look at Badlapur, Ambarnath, Dombivli, Kalyan as a location which will continue to offer affordability and great amenities because the project sizes are large. So you could look at a reputed developer and then go ahead for your purchase.
Jayashree, before I ask you about the neighborhood that you recommend, I also want to work in this question. Nishant wrote to us. He wants to buy either a 1 or a 2-bedroom flat in Thane with a budget of 35 to 80 lakh rupees. And this is the group you were just mentioning when you said this is where the demand is. He said, what is a suitable neighborhood to look at? Please recommend some projects. Could you help him with the neighborhood within Thane, within that budget, Jayashree?
Faye, I did search the website. Not too many options, but yes, a couple of options. And none of these are new properties. These are in the secondary market. He can look at Dombivli East and West. I have a few 550 to 650 square feet apartments here. And I have Lewis Wadi, which has 575 to 600 square feet apartments listed here. But remember, when you look at listed properties, these are listed by agents. And there may be a difference between what is listed and what the actual transaction will conclude at. But however, I would say that there are some options in the secondary market, not too many, but yes, there are some. If I may also give you some suggestions, I think going by what's happening on the site, I see that Khargar, Ulve, Godbandar Road, Dombivli East, Kandivali East, Mira Road. These are the places where people are looking and finding properties. However, if it's not good social infrastructure, as in schools, hospitals, entertainment and shopping options, they are not actually looking at buying and staying there, which is why these transactions are slow in the market.
Now, if you're looking to buy a home in Mumbai, in the neighborhoods we just talked about, here are a list of interesting developments.
If you're looking to invest in Mumbai, here are a few options for you. In Ghatkopar, The Address by the Wadhwa Group. In Chembur, Central by Godrej Properties and Estate by Lakhani Builders. In Vadala, New Cuff Parade by Lodha Group and Islands by Ajmera Group. In Kalyan, Lifestyle by Nirmal Builders and World by Falco Developers. In Dombivli, Pallava City by Lodha Group and My City by Runwal Group.
We're trying to figure out the Mumbai realty market. Now, a very interesting development happened last week. Now, remember, we talked about the fact that the Maharashtra government is considering a regulation act when it comes to real estate in this market. And we all know that we desperately need a regulator in this market. The interesting part about that act, it included the fact that each developer will be given a grade. And the grade will be arrived at by the government based on quality of construction, facilities provided in each of their projects, customer satisfaction and timely completion of projects. And as complaints stack up against that particular developer, his ranking will keep going down. Now, from what we understand, the local Maharashtrian arm of KHARADI, which is the association, has said that's absolutely out of the question, and they would rather have a private analyst do a grading of each developer. Now, I know that all of the viewers will be in agreement when we say that there is a need for a grade or some sort of rating. Do you think it's possible that we might see this rating come up anytime soon? And what would be the best way for the government to go ahead and do this, Sunil?
I feel it is very much desirable, but I'm quite apprehensive about the first aspect what you mentioned about the grading of a developer. I'm very much confident that real estate regulatory bill, which ensures the larger governance, larger compliances, larger disclosure from the developer fraternity is very much possible. But grading a developer in the absence of having no public domain information, it's really going to be challenging. But I will be the happy man if we could see soon something like this.
We'd all be happy if we could see something like this. Ravi, the other thing that happened with that bill is the government wanted developers to disclose all the funding for each project, which again, developers are not very keen to do, and I'm not surprised. How important will it be for, or how helpful will it be for end users and for investors to find out where that money is coming from, or how much money is coming in, and most importantly, at what rate of borrowing? So if I know that a builder is paying upwards of 20% to borrow some money and finish an apartment, which means his margin has to cover that. So how important will it be for me as an investor to know where the funding is coming from?
I think as an investor, clearly it is very important to know. Whether he today knows it, no, there's no way to know from where the developer is sourcing the fund, particularly for buying land. Again, banks do not fund land acquisition, as we know. So the developers usually rely on unconventional sources, on their relationships with HNIs, who probably they get in today as the inner circle of investors, who they offer or offload preliminary stocks, maybe 5–10% at a low rate, so that they even earn money eventually. I just want to digress on the fact that I do not personally feel it's wrong for the markets to know or grade a developer. Probably it's not the right thing for the government to do, and it's the right, or to set the process by the government. Property development companies which are listed are already used to getting themselves graded, and therefore this can continue into the private developer domain, to my knowledge.
Jayashree, I want to bring you in here. Now, in the absence of grading and in the absence about, there's no information right now being shared with us about sources of funding, what can we do to make sure that we stay clear of, developers who might delay, developers who likely deserve a bad rating, but since there's no rating right now, we have no way of knowing. What's your advice to buyers and investors at this point?
Faye, in the absence of a regulator or any structured information being available in the market, the best thing to do is go for the previous track record. You do know that developers have built in the past. It is worthwhile doing some research on your own on what kind of rating, what kind of projects they've done. Have they delivered on time? Have they delivered quality? Are people happy staying in their projects? Sometimes it's good to just walk into the projects and talk to a few residents there to figure out what are the problems and how happy they are with the developer. These are some things that the consumer needs to do in the absence of there being structured third-party information.
All right, we have a few questions I'd like to get to. Mushtaq Ahmed has written in, he wants to buy a 2-bedroom flat in Mumbai with a budget of 50 lakh rupees. Please give me some good locations. We keep circling back to the fact that people want homes with that budget which might not be available. What would you recommend he does?
I think in terms of location, 50 lakh rupees, one will have to look at the peripheral locations of Virar Vasai, where the prevailing capital values are between 4,000 to 5,000 rupees a square feet. There's Dombivli Kalyan Belt, which probably borders around that kind of a budget. And some of the developers like Rustamji, Lodhas, Kalpatrus, they're having projects in these locations. And
at 50 lakh rupees, I seriously.
Well, in these locations, Virar Vasai, we have Rustamji, who may have 1 bedroom, to offer with 4,500 to 5,500 rupees a square feet. Incidental cost put together, it may overshoot 50 lakhs. Yeah.
That's, like we keep saying, that's the unfortunate part about Bombay. But if you're in the market to buy something at 35,000 rupees a square foot in the Lower Parel area, it's a buyer's market for you. For everybody else, unfortunately, Mumbai is not the most welcoming city at this point. Gentlemen, thank you so much for spending time with us this week. Jayashree, thank you as well. And for those of our viewers who are interested in Mumbai, we're going to be spending all of next week taking a close look at BKC and what the changes in BKC mean for the neighborhoods around it in terms of the real estate market. Welcome back. You're watching the Property Guide in ET now. Thank you so much for staying with us. It's time for your Meet the Developer segment. And this week, we're taking a close look at Kolte-Patil developers. Sujay Kalel is the CEO of Kolte-Patil. Sujay, thank you for joining us. I want to first get a view from you about the residential market in Pune, which is your primary market. What has been your sales experience over the last calendar year, especially the festive season?
As far as the residential market of Pune goes, there has not been much variation pre-election and post-election. So it has been a stable market. Again, festive season was, I would say, better than what it was last year. Definitely better, but obviously, I think in line with the changing buyer trends, where there is nothing. I don't think there is anything called as Diwali anymore for the buyers, and that is what the trend has been for the last 3-4 years. But yes, definitely the festive season of 2014 was tad better than what it was of 2013.
Do you see demand really in the luxury real estate segment returning in Pune, because there's been a lot of supply, but is there enough uptick?
Yeah, so the luxury demand in Pune is definitely returning. We have seen some, we have done some soft launches for a couple of projects in Pune. They have seen a very encouraging response. So, hopefully as the economy picks up and as the capital markets also start opening up, we'll see more demand for luxury residential market picking up.
But so far, you've started off with Pune, you've entered Bangalore, Mumbai and Goa. Are there any other markets that Kolte-Patil is considering in the future?
Not for the next couple of years at least. So the plan is to consolidate in these markets. And we maybe a couple of years later we might look at some other market, but not immediately.
Well, the interesting thing about Kolte-Patil in Pune is that a lot of your projects currently are in either WAGHOLI or KHARADI right now. Tell us what what your 4 forecast is for these neighborhoods in terms of construction and in terms of pricing going forward?
These markets, you know, in the last 3-4 years have given very good returns to all the investors, and we are very bullish that in the coming years as well they will give very good returns, mainly because of the developments on the infrastructure front that have happened in both these markets. It may be physical infrastructure of roads, bridges and all of that. It may be social infrastructure of malls, schools and in other related. So they're really emerging as preferred destination for home buyers, and it will continue in the future.
I want to talk about 24K Province, which is a luxury project that you're building in Pune right now. Very interesting pricing. It's being priced at about 5,600 rupees. If we compare it to the rest of Undri, which is priced at about 4,000 rupees, you're pricing far above the market. For investors who are considering this project at this point, what sort of appreciation can we expect from that price that you're starting at?
Well, 24K is a different product altogether. It's a different you know, quality of living. And you know, we are getting a customer gets more than just the you know, amenities and specification. It's a different architecture, it's different engineering that goes in construction, it's different choice of materials, it's completely different product altogether. So it will be really unfair to compare it with an average market, but yes, you know, there is a different class of people that follows the 24K product, and it's reflective in the pricing and the product as well. We are very hopeful that the prices should double for this particular product range.
And finally, before I let you go, what project launches do you have in the pipeline right now?
Yeah, so the next 3 to 6 months there are about 6 to 7 large project launches which are lined up, including a couple of projects in Mumbai. Then we have 6 projects that we have lined up in the eastern and western suburbs of Pune, and a couple of projects in Bangalore.
All right, Sujay, many thanks for joining us on the Property Guide. Thank you so much for being part of the show. Now, if you have any questions about buying property, you know you can get in touch with us. Our email ID is at the bottom of your screen. You can also reach me on Twitter. Send in feedback on the show or what you'd like us to talk about. It'll be my pleasure to hear from you. Thanks for watching.